Alrighty, so tradingview.com, you would then click on chart here, or you could type in the pair you want to look at, but I always just click chart.
You know, you said trade, or so Trading View. Is that anyone can go to Trading View or no?
Yeah, any person can go to TradingView. This is just where all the charts are.
Okay.
So tradingview.com. Every time I get on Zoom, it like slows my computer down.
Really?
Yeah, I don't know why. It's just Zoom. Okay, so I don't want to look at this right now. So I'm just gonna go to probably GBP AUD. I go to any pair. I mark
every pair or no?
any pair that's set up. So I trade anything that's set up really. So pretty much that's every pair if it's set up at the time.
Oh, okay.
Alrighty, so I am a swing trader, so I'm pretty much showing you what I do. I swing trade. That's pretty much like I don't know if you remember, but with swing trading, it allows you to just, not have to be on your charts, analyze your charts on Sunday, mark up your chart, and then when your chart is set up, your pair is set up to actually enter the trade, you can set it and forget it and go about what you have to do.
Can you do that for the whole week? So you do it one time and it lasts for the whole week, or is it just daily?
I hold my trades until they hit my take profit. So it could be a week, it could be 2 weeks, it could be a month. I hold my trades.
Oh, okay.
So I mark up on the higher time frame. So that's what determines what type of trader you are and how long you'll be holding your trades is by the time frame that you're actually marking your chart up on. So I start on the monthly to the weekly. So I will start on the monthly time frame here just to give you an idea. So I pretty much will start on the monthly time frame. Since this is the monthly time frame, you don't need to look at all this because each of these candles takes a month to form.
Ah, okay.
Yeah, so you don't really need to look at all this because if you look at the date, this is 2009.
Gotcha.
Yeah, so this is unnecessary. So since I look on the monthly, I just look to where price is currently at, and price is currently at this blue line. So this candle is forming for the month. It's not finished because it's the 24th. We have a few more days left. So when this candle, when the 28 days? Yeah. On the 28th, a new candle will form. So pretty much March 1st.
Gotcha.
So that's what determines these candles. So pretty much I start on the monthly time frame and work my way down, which is time frame analysis, top down setting. So on the monthly time frame, what I'm looking for is your support and resistance. Your support, I'm gonna write some stuff down. Your support, your resistance is gonna be your ceiling, meaning that price doesn't want to break your ceiling. So I'm gonna put your resistance here, which is your ceiling. Oh, my spelling sucks. And what this pretty much means is that, let me see, zoom in. Yeah.
There you go. Can you zoom in?
Yeah. I like to look at everything as a whole. So I just zoom in because I know I'm on the training. So pretty much what your resistance means. Okay, there's resistance and your support. Hold on, let me draw support so you can see also. Use this. This is something you have to train your eyes to see. So when it comes to drawing support and resistance zones, these are zones in which you would be trading in. So this would be my resistance, meaning that price came to this area and resisted to break this area, meaning it came here multiple times. The more touches or the more times that price has came to this line or this area and price didn't break it, it's a stronger resistance. So price came here once and didn't break the zone, right? Price came here once and didn't break the zone. Now price, let me take this MACD off because it's driving me insane. So price is currently pretty much here and it didn't break that zone. So what do you think we're expecting the market to do?
Not break the zone.
Yeah, and go where?
Down.
Exactly. So when you're going down, you would be getting in for a sell. But just because we see that price came here multiple times and didn't break the zone and price is currently pretty much at our zone, we have an indication, okay, let's look out for a sell. But we're not just going to jump into our sell, okay? Mm-hmm. So you always have to draw your support and resistance. I mean, you always have to make sure you have a resistance, and you always have to make sure you have a support. This is your support is where you're expecting the market to go to and then possibly reverse again. Does that make sense?
Yes.
Okay, so pretty much my take profit would be down here. And this is on the monthly, so this is like a lot of pips. This is 1,000 pips, which is great because if you have that at $1 a pip, that's 1,000. So you do see where it says negative 1082?
Yep.
That is how you calculate your pips. That means to get it, you would go to this ruler right here.
Okay.
So you would just drag it from where price is currently at and bring it on down so you can actually have an estimate total of what your pips would be. About 1,000 pips.
Okay.
All right, so now we've got our support and our resistance. So your eyes might not be able to see your support and resistance right off the bat because it's something you have to train your eyes to see. So you can always change your line. Your candles. You see how we have the candlesticks? You can always change it to a line chart, which helps a little bit more. It's just it doesn't click. So with a line chart, wherever there's indentations like this, kind of like a V. Oops, let me remove that. Like this.
Mm-hmm.
These are areas that the market came to in reverse. So then you could point your support and resistance a lot better.
Okay.
Okay, so now on the monthly time frame, right? We found our resistance, we found our support. We know this is a nice strong area of resistance because the market came here 3 times and resisted. Market came here multiple times and didn't want to break support. Support is going to be your floor. Resistance is going to be your ceiling.
Okay.
So now I would drop down to a lower time frame so I can actually see what is really going on with the market because, like I said, these are monthly candles, which means it takes a month to form. I need to really see what's going on the lower time frames, like what's going on within the day. So I usually drop straight down to the daily time frame. I'll skip over the week.
Okay.
Oh, hold on. I have to go get the door. Somebody's at the door. Okay, I'm back.
Okay.
Sorry. All right, so now I'll go down to a lower time frame, so the daily or even the 4 hours. So I'm starting on the monthly or the weekly. It all just depends on my eyes, on what I see. And then I'll drop down to the daily time frame or the 4 hour. I'll remove this. So pretty much when you actually, now that you have your support and resistance, because remember, this is your resistance, this is your support, right?
Mm-hmm.
Now that you have that, now you'll begin drawing your trend lines because what kind of trend is this? An uptrend or a downtrend?
Right now it's an uptrend.
Okay, exactly. So remember, since price is pretty much near our area of resistance, we're expecting the market to drop, but we're not just going to get in for ourselves yet, right?
Right.
So we're going to draw our trend line. What makes a valid trend line is if it has 2 or more wick touches. So so do you know what a wick is?
You said right there, the stems.
Yeah, so these are the wicks. It's just like a candle because it's your candle and your wick. So as long as it has 2 or more touches, it's a valid trend line. So we've got a touch here, a touch here. These are considered a touch. This is a touch. This is a touch. So this is a valid trend. So pretty much this is in an uptrend, right?
Right.
What we are waiting for as our confirmation, there's so many ways of trading. That's why I love trading. So what we are waiting for as our confirmation for the downside is the break of this trend line. So you see how it's been steadily riding in this trend? So it's a solid buy, right?
Right.
So when price actually breaks below your trend line, and there's a thing called a retest. So when the market makes an impulsive move down to the downside, after each impulsive move, the market will create a flag or a pullback or retracement. Those are the 3 words that it's called: a flag, a pullback, or retracement. So it's going to retrace to retest this line. But you're not going to be sitting around all day waiting for this to happen. We have this app that I'm going to want you to download. It's called Call Levels. So write that down. what call levels does is it'll alert you when price is at an area that you want it to be at. So if you wanted to get an alert when price comes down here to let you know that it broke your trend line, you'll get that alert rather than you staring at your computer all day.
Perfect.
Because you have to wait for the market to set up before you actually get in for your buys or your sells, because if you don't, you'll blow accounts.
Okay.
So pretty much what it's called market structure. I'm gonna send you a video on YouTube about market structure because that's that's really helpful. So market structure is understanding the way that the market is going. So the market likes, for an uptrend, the market likes to, are you cold? Oh, I'm sorry. The market likes to create, at the uptrend, the market will create higher lows and higher highs. So here's a low right here, and then here's a high right here, right?
Okay.
Then there's another low here, but it's higher than the last low, which is here, for price rise.
Gotcha.
Does that make sense? And then we have another high. So this is higher than the last high. So now that's market structure. Love, it's so loud and I'm on a call here. Jeez. So now what we're waiting for is for the price to break below this trend line and retest this line.
Hey, actually, I have a question for you. Sorry.
Yeah.
Are you able to record this while we're doing it?
Yeah, it's recording.
Oh, perfect. So you can still send it to me. All right, go for it.
Yeah. Okay, so the market, like I said, you'll have your call level set here. So anywhere below the trend line pretty much. So I'll send an alert maybe like here at price. Oops, sorry, didn't mean to use that one. Maybe like here. So the price would be 1.79776. Do you see that over here?
Yes.
So that's what you would do. You would set that alert in your call levels, or actually what pair you're looking at. The pair you'd find right here. This is where you'll be able to change your pairs at, whatever pair you want to look at.
Wait, hold on. Where are you at? Because I'm over here.
Oh,
okay. I got you.
So if you're looking at GBP AUD, you would go to your call levels app, go to GBP AUD, and you want to set an alert for this price, pretty much.
Okay.
So that's what you're waiting for. So for full confirmation, you're waiting for price to break this trend line and then retest the trend line. But also, there's just so many different ways of trading. Also, another way for full confirmation that you can use is an indicator called the MACD. So I love the MACD. I actually just learned this through our bounce back strategy, and it's really, really amazing. Because I trade US 30 a lot, which is an indices, so it moves extremely, extremely fast. But I make like $150 in like 20 to 25 minutes.
That's awesome.
Yeah, I love it so much. I haven't even been trading currencies lately because I just love indices because they go so fast.
What is it called?
It's US 30, which is the Dow.
But it's the same thing, right?
It's indices, so it's not Forex, but they're all a part of the same. It's like trading stocks, but you're not investing into stocks because you can trade on your MetaTrader. You could trade indices, which is gold and silver, US 30, things like that, but they're not foreign currencies.
Oh, and I can do all that in Meta 5. Okay.
What'd you say?
I can do all that in the MetaTrader 4, right? Yeah.
But it just sometimes certain brokers don't accept it. Like Trader's Way doesn't have indices, but Hugo's Way does. So I have Hugo's Ways for my indices. So I use my Hugo's Way to trade my indices in gold and silver. And then for Trader's Way, I use it to trade all my foreign currencies. So like if I went to US 30, I can go to US 30. And you can look at all this on TradingView though. TradingView has everything you want to look at for any chart.
Got you. Okay.
So pretty much, okay, so the MACD. So also for the MACD, you follow the exact same rules, draw your support and resistance, start your support and resistance on a higher time frame, and then you would drop down to the daily or the 4 hour to actually get your trend. Are you following?
Yep.
Okay, great. So then we have the MACD, which you would just click indicators here. I'm not a big indicator fan, which is why I don't use really indicators. I just use my regular trend lines. But I learned this from one of the top traders who doesn't use indicators also. So when he showed me this, I was like, wow, I love this. So it's called the MACD, M-A-C-D, MACD. It'll be right here. And pretty much here it is. So when your price, once you get that alert, right, that ding, 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 it's telling you your price broke below your trend line. If you look on your MACD And both your lines, you see how this orange and this red line here, orange and this red line here, when they've crossed through your histogram, this is your histogram. When it actually has crossed through on the other side, you see how this has crossed through here? When it has fully crossed through, then that's full confirmation that it's going to the downside and you can get in for your sell.
Oh, okay.
Rather than just getting in for your sell and not knowing that if it's going to really sell or not. So once you get that alert and you pull up your MACD and it crossed through the histogram, I would automatically just get in for my sell. And my stop loss, and then this is how you determine your stop loss. Your take profit is automatically going to be your last support. I wouldn't put it directly here. I would probably bring it up just a little bit, just in case price doesn't want to go all the way there. But I'll bring it up just a little bit, probably to here.
Okay.
And that would be my take profit. So when it comes to actually, and this is how many pips? This is 700 pips. That's amazing. 744 pips.
But would it do 744 pips, or would it'll just head that way?
It's heading this way. Okay, so with the foreign exchange market, price always retests, always goes back to where currently price was at, which is why we look on a higher time frame, because you're getting your support and resistance based off of where price previously touched multiple times. The more touches that price touch that line, better confirmation that say that price will definitely go there.
Gotcha.
So even this blue line, this green line that we made, price came here and retested. This is like perfect. Price was here and dropped again. Like, yeah, this is actually really good. And you could just go back in time and see. Well, this is the monthly, so you probably wouldn't see much there. If you go on the weekly, you'll probably see a lot. Yeah, a lot. Price came here, went up. Price came here, reverse. Price came, yeah, this is nice. I like this zone. So yeah, this is things that you would have to do on your chart. So like, I want you to like spend at least 30 minutes going on your chart and drawing out your support and resistance zones, because that's the key to your success. You're going to have to know your support and resistance zones. So like when I do with my team, I do markup sessions with them on Wednesday. So I know if they're putting their zones in the right area, because there's so many different zones you can have. There's no right or wrong. It's just all about making sure that that zone that you have, that line that you have, has had multiple touches.
Gotcha.
The more, the better. So what was I on my daily time frame? So, yep. So now you're waiting for price to break this line. Like I said, you're going to have your alert. And then on top of that, you're going to utilize the MACD.
Can you add an alert there? Like it says, add alert?
Yeah, you just have to upgrade. You have to pay upgrade for trading. I don't have the upgrade.
That's why the call levels are for free?
Yeah.
Okay.
But yeah, most of them, like my educators and stuff, they use the alerts on their trading view. But I like call levels too, because it's just the same. And plus, you just get it on your phone.
Gotcha.
So then that's pretty much what you're waiting for that confirmation. But now this is another thing. You see how price has resisted this area, right?
Right.
Let me go back to the monthly so you could fully see. So price has resisted this area, and this is why I said we're not just going to get in for a sell because price came to our resistance, and now we're like, whoo, it's at a resistance, we're going to sell now, right? We're not doing that because price can break above our resistance. So if price decides to actually break above, meaning price decides to break this way and go up to the upside, what you're waiting for as confirmation to get in for your buy, because, okay, so you know that when the market is going up, you buy, right?
Right.
You're buying low and you're selling high. When the market is going up, you're buying. When the market is going down, you're selling. So what will give you your confirmation to get into this trade for a buy is when price actually breaks above your line. Let me zoom in for you. When price actually breaks above, let me remove that. When price actually breaks above your line, so that's why I always set two alerts. I set an alert for the break of the resistance, and I set an alert for the break of the trend, so I know which alert I'm going to get.
Gotcha.
Just in case I only sent an alert, say, for the sell, for the downside, and then it went to the other side, and I could have gotten for that buy, but I didn't send an alert. Oh, thanks, love. So what's going to give you your confirmation to get in for the buy is that If price breaks above and then comes back down to retest this area and price just stays here and doesn't break this line.
Okay. Then you know
So,
it's still fine.
yeah. So price will come here pretty much like this. Let me draw it for you in candle form. Cool. We got a candle there. Broke above. And it'll probably go up even more. But that's okay because we don't chase the market. So when price broke above your trend line, you got your ding, 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 you got your alert, and it went up a little bit more. But when price goes up, it always comes back down to retest.
Okay. It always does, right? It won't just
Always. It will go, if it goes back, and that's why we say no retest, no entry. Because if your price does not come back down to retest, we would not enter the trade. And that sucks sometimes because you're like, dang, you missed out on all those pips. But that's our full confirmation because we have to have confirmation. And that's why you have to have a set trading plan.
Gotcha.
Your trading
Is there
plan.
the other people that do it the other way, that they will go ahead and just get in and let it ride
Yeah.
up?
Mm-hmm. Because there's so many different ways of trading. So they probably have different confirmations.
Gotcha.
Yeah, so they will. There's a lot of people that don't wait for retest. But the thing about it is that the market will fake you out if you don't wait for it. That's the only reason why we say no retest, no trade, because the market will fake you out. So say, for example, the market went up and you're like, oh, let me get it for my buy because it just went all the way up here, right? But it will fake you out and create a candle that goes all the way back down here and you lost all that money.
Well, that's good. Oh, but yeah, but since you're not following it daily, you wouldn't know it is going down, right?
No, you probably wouldn't because, I mean, besides the fact that you have your alerts.
You'd have to come back in and set a new alert.
Yeah, or you would have your stop loss. So say you have, yeah, so I'm going to get to that. So pretty much say you see how the price broke above our resistance, right? So for novices that want to trade and see price breaks above your resistance, they'll say, oh, let me get in for this buy. But no, we're not getting it for the buy just yet because we have to wait for a retest. So pretty much if you don't wait for that retest, and like I said, he got in for the buy, right? And he has, say his take profit, I'm going to put a green line up here. Say his take profit was up here, so he wants price to come to this area. Once it gets here, it'll take him out the trade and profit, right? So say price broke his resistance. He's like, let me get in for this buy. And then it went up more. He's like, oh, okay, cool. I'm making all this money. Forgets about his trade or whatever. And price comes back and drops all the way back down here. That's why we don't get into a trade unless it retests. And what
it'll do that all day. Like for one day, it'll go that high and then drop all the way back that far down.
Yeah, because it could be affected by news. News is what affects the market. And like when a news drops, it can create this large, massive candle, which is why I check news before every trade. So to check news, you go to forexfactory.com. Forexfactory.com. Click on calendar. And this is all high impact news, our red folder. Yours is not going to look like this because I have my settings. Yours is going to look like, how do I go back? I don't remember how I changed my settings. Oh, yours is going to look like this. It's going to have all these folders, but the only ones that are important are the red folders. So I just have mine on red folders because I don't need to see all that if they're not important. So for this week, we have NZD news today. It already dropped at 4:45. So when you see that news is going to drop at a certain time, that means it's time to be like cautious. You either don't want to trade that pair, but if you're already in that pair, then you would protect your profits. Okay, so that's what news will do to you if you don't. So I check news before I enter every trade just to see if news is gonna see. This is a GBP. See, we're looking at GBP AUD, right? I got into this trade. I looked at news, and I'm like, okay, GBP news is gonna drop at 5 a.m. tomorrow. I mean Tuesday. Oh, tomorrow actually. So GBP news.
Tomorrow will be Monday though. Or is it Monday right now? I can't hear you now. No. I hear you clicking, but I can't hear your voice.
Hello,
Yep.
hello.
Now I hear you. Now I hear you.
Okay. So yeah, so at 5 a.m. news will drop for GBP news. I mean for GBP, but not all news will affect the market in a high way, but you still have to always be cautious, always for impact news, high impact news.
What does that mean to the right where it says actual and previous in forecast?
To be honest, I don't know. I don't study news too often. I just check to make sure that I'm not in a pair that's about to drop news, or just to make sure, because we have some there's two different type of traders. There's technical traders who go based off of analyzing their charts, and there's fundamental traders who trade based off of news. I'm a technical trader.
Oh, you're technical. Okay. I was gonna say,
Yeah,
you do.
I just
So it looks like you do a little bit of both.
Yeah, definitely. I utilize just news just to see what is going to be happening for the week. But there's educators on IML TV that really go in depth with news, but it just gives me a headache. But yeah, I do. There's one who's he's like so fundamental. He's like on it. He's like, okay, Governor Carney's about to speak, this and that. I'm like, well, I'm just gonna trade my technical analysis. Okay, so pretty much here. So get back to where I was saying. So the news price can definitely fake you out and do this, which is why you always wait for a retest. So what a retest is that price will come to your resistance line and not break it. So once this candle closed, it never broke the resistance.
Gotcha.
And that's when you get in the clear to say, okay, now I can buy this. And then you would then buy, because this is how market structure works. After an impulse to the upside, like I said, it'll create a pullback. That's that pullback right there. After the pullback, it'll then create a continuation.
Okay.
Oops. And that's same for the downside. If market decides to have an impulsive move to the downside, it'll then create a pullback and then create a continuation.
Gotcha.
I'm going to send you that video on market structure. It's really helpful. Okay. So from here, you got this nice retest, and now you would get in as your So for here, this is where you would set 2 alerts now after you get your first alert. So say you got your alert for the buy, right? You're like, right. Okay, price broke my resistance. Now I'm going to wait for it to come back down to my resistance, so I know. So you would set another alert. That way you're just not staring at it.
Gotcha.
So you would set an alert back at your resistance. So when price comes back down to your resistance, you know this, and then you could then say, let me get into the trade.
Okay.
But you would be doing this on a lower time frame, like the daily or the 4-hour.
Oh, really?
Yeah, because on the monthly, it'll take a month for your candle to form.
Yeah, I got you. But you said the daily or the 4 hours. Okay.
Yeah, the daily or the 4-hour. I use both interchangeably because I like the 4-hour because you get more candles and you get to really see sometimes. But the daily, I've been using the daily a lot only because it's less noise. It's not as noisy.
And what do you call the oh man, the little tip? What do you call the tip again? The wick. The wick is actually going down, right? But that goes all the way up. Or what is the wick? Will the wick go down and then go back up right away?
Okay, so wicks tell stories pretty much. So there's a book called Candlestick Bible, and it teaches a lot about what these candlestick patterns and the wicks overall. But like a wick like this, for example, there's lots of meanings for this. So this wick right here, for example, means that sellers were in control because price came all the way up here, which means it formed a candle just like this, right? But it never closed like this. This is a daily candle, which means it takes 24 hours to close. So say when this candle opened, each candle opened at 5 p.m.
It went up and went down right away.
All the way down, which means sellers were in control.
They were in control. That meant, okay.
So now if you were to see this wick or something like this would have gave me indication right here to, as soon as this closed, to get in for a sell. And you see it had a drop here.
But as soon as which one closed?
This one right here, because it formed that nice wick that says that sellers are in control.
All right, okay. You would have known to sell. You would have known to sell then.
Yeah. So for this one, I would have known to get in for my sell. And it dropped to about 500 pips. Lovely. I try to do about 200 pips a week. 200 to 200 pips a week.
Okay.
It's my pip goal per week.
But is that per currency you're trading or no? or
Well,
in
I only
total?
trade about, that's just for the week. So I only put myself in like 2 or 3 currency pairs for the week. I don't over trade because with trade, because I'm a swing trader. So with being a swing trader, I get 200 pips. That's a lot of pips. For most people that are scalpers, they're going for like 5 pips at a time. But imagine you going for 5 pips at a time to get to 200 pips. You know how many trades you're gonna have to enter to get that? When
Yeah,
I
you're gonna be
do
sitting there
one
staring at the
trade,
computer, right?
huh?
And you have to sit there staring at the computer too.
Exactly. And I'm not a scalper. I don't do that. I'm not going to sit and stare at my computer and try to get in 20 different trades so I can get my 200 pips for the week when I could just be in one trade and let it ride out.
Perfect.
So that's just how I do because I have things to do.
Understood.
So if this was your goal for 200 pips, you would have got your 200 pip goal. There's like so many different ways to trade.
And wait, and that's not even a day, right? That's just a couple of hours.
This is actually a day. It tells you right here how long this actually took. This took
8 days.
This took 8 days. Yeah.
Oh, okay.
Your 491 pips, but 8 days is pretty much 2 weeks in the market. So you would already made your 200 pips for the last week and 200 pips for this week. Almost 500 pips, you know?
Really? Eight days is 2 weeks in the market?
Well, it's 2 weeks, but it's pretty much because the market's open for 5 days. Monday through Friday,
okay.
closes on the weekend.
Yeah.
So you would have been closed during the weekend, but you would still be in this trade. It wouldn't be moving. And then when the market opens Sunday at 5 p.m., you would have been accumulating your pips. Does that make sense?
Yes.
Yeah. So that 8 days would have been pretty almost like not a full 2 weeks, like a week and a half.
Okay.
And you would have got almost 500 pips in 8 trading days, which is already helping you with your trading plan. So I have a trading plan. I can send that to you as well. It's really
send me that one so I can try to do it.
Yeah, it really is. It's very, very helpful to manage your account. I'll just show you.
Well, your screen froze on my end, so I don't.
Oh, okay. I forgot. Let me share this screen. I forgot I changed the screen. Let me share. Alrighty, so say you wanted to start this with, you would put in, say, I don't know how much you want to start it with, but just say you had $100.
Okay.
Your tip goal for your week, this is your weekly goal, would be 200 pips, right?
Mm-hmm.
It's going to tell you what lot size to choose because you don't want to over leverage your account.
Perfect.
You have the ability to choose whatever lot you want because some people will look at this and say that's not enough money. But when you actually are compounding your account, it starts to grow.
Okay.
So if you look at this and see you started your balance with $100 and for that first week you wanted 200 pips, but you're only doing it at 10 cents a pip, you got $20 for the week, right?
Gotcha.
Which people are like, that's really nothing. Okay, I understand. Then the next week you got your 200 pips again, but you remember how I just said you for that one trade that you were in, you got almost 500 pips, which covered pretty much your 2 weeks.
Gotcha.
And then you're compounding this. So look at 13 weeks, you're now at $1,000. So now that you have more in your trading account, you can then up your lot size. And it's giving you your entire lot size of what you should be using.
Oh, really?
Yeah, you see right here, it says lot size.
Yep.
So it's letting you know what you should be doing so that you're not over leveraging, because really and truly for every $100, you're only supposed to be using 10 cents. But most people don't do that because they are over leveraging their account and using this as something to get rich quick. But you can get rich really quick when you actually follow the rule and compound your account. Because look at 52 weeks, which is a year, just a year. And this is just saying if you don't take your money out, because you will obviously withdraw your money, which is fine. But if you compound your account at 18 weeks, you're having $2,000, which now you can up your lot size to make $500 within that week. Does that make sense?
Mm-hmm.
So even here, 27 weeks, that's halfway through the year. That's like June. Now you're at $10,000 just off of $100 for the new year.
Gotcha.
So I started this trading plan this year, the first of this year. I was like, I'm going to start a new trading plan. I already have what I want to have set, and I've been just following the plan week by week.
Is it working?
Definitely. I get my 200 pips a week. I follow my lot size and my goal size, and I go about my business.
So let me ask you a question. If you since you've already seen it work and you're doing it and you're flowing with it and you're confident with it, if you now change your lot sizes to higher, would would you benefit?
Definitely, but I'm still so afraid to do that. Like I'm not the type to over leverage because I understand what it means to blow an account. When I first started this, we all blow accounts because we're over leveraging our account, putting in 20 different trades at $1 a pip, and then that money's gone instantly.
Okay.
So it's all about leveraging your account the right way, because when you start throwing them large lot sizes on with not the proper amount of money in your account, you'll be losing faster, because if you have drawdown, because your trade is always going to draw down a little bit before it goes back up. Like I told you,
if you got your set point set up, it'll draw down and it'll cut you off.
Yeah, so if you have massive lot sizes at $10 a pip and you have $100 in your account, you can go down $10 in your account, is 10 pips and your account's wiped out.
Yep.
Rather than if I had it set at 50 cents a pip, I wouldn't be wiped out from 10 pips.
Correct.
So that's what it means by properly leveraging your account. So this is your goal. On this side is your goal. So say whatever you want to start your balance on, you could plan it out. Your 52 weeks, which would be a year, however long you want to have this for. Say you have a set goal of doing something, you want to go on vacation, and that's why you can have multiple accounts for each thing that you want to do. So you can do 200 pips in one account, and you can be doing 200 pips in another account. All of this all in the same week, and be trading the same pair.
Oh, okay.
Yeah. So with your Trader's Way, you can open so many different accounts. You want a car, you want to have an account for your car, you want to have an account for your kids, you want to have an account for your grocery, you want to have an account for your bills, you want to have an account for whatever.
Really? And it's better. And so, all right, that's enlightening. I didn't understand that, but I mean, I understand it now, but that's enlightening. So is it better to do that instead of putting all the money in one account?
No, that's fine. You could start off with, it just depends on how much of your money. So if you're saying like $500, you could put maybe $100 in one account and start one with 400.
Oh, okay. Well, what's the advantage of that?
You're still going to be making money on both accounts, because with the $100 account, you're going to be compounding this just as this is. So say in 25 weeks, that's one of your accounts that you're not touching, like to take out any money.
Gotcha.
So it's benefiting you because you're still making money in both accounts.
So wait, all right, so I see you following it, and it's telling you how much trade. So go down now. I'm sorry, scroll down. So right there, it went to 52 weeks. And how much you made in 52 weeks?
Almost $1 million. Oh no, right here with 100 is for 410,000.
Do people actually do that?
Yes, and that's why I'm following it to the T. Because when I was so inconsistent with my training plan. I'm like, if you're inconsistent with your training plan, you're not going to compound your account enough. So that's why ever since the new year, I've been completely consistent with my trading plan. But the thing about it is that a lot of people still withdraw their money, which you can, which is fine, which is why you should have multiple trading accounts so that you can have one account that you're just not touching.
Perfect. That's good. That's a good way to do it where you just said it. So scroll up again. I'm sorry. So if you're compounding, so let's say by what week? By 1 month.
We're like in week 6 or 7. No, what are we in? I forget what week
we're almost 8 weeks.
We're 8. Okay, yeah. So yeah, we're here. So pretty much here.
So profit goal is 60. So is that daily? What is that? Week. That's weekly, right?
This is the week, because your pip goal is 200 pips, right? And it's telling you what your lot size will be. So you're going to put your lot size at a 0.03 for your 200 pips. You remember we just looked at GBP AUD and you got 500 pips, right?
Right.
So that pretty much went for 2 weeks.
Gotcha.
And that's why you put what you actually made and all stuff, everything in here.
Okay.
With the date. So this is what your goal is, of what you can see, so that you can physically see it, and then you put everything here of what you're actually doing for that week, what actually happened. You started with $100, you made your 200 pips, and now you're gonna put in how many pips you made, and it's gonna automatically calculate. So you made, say, like I told you, that trade that was 500 pips, right?
Right.
So you made 500 pips instead of 2. It calculated it for you. Now you're $50, so now you're at 150 for the start of this week.
Okay.
And then.
Oh, okay. All right. Got you.
Yeah.
So you get 500, you got 50.